German CPI in November confirmed at a 4.5-year low. Will this add fuel to the QE fire? Robert Kuenzel joins me down the line to discuss. Robert, much of the data this morning met expectations but still disappointed. I guess the question is, how much more is the price of oil going to affect inflation?
Yes, you're absolutely right. In the short term, the CPI data that we saw, inflation from Germany and France, broadly came in line with expectations. But I think in the big picture, these are very, very low inflation rates that we think will continue to fall further. So to give you an idea of the impact of the recent oil prices, if we look at next year overall, we'll probably see energy price deflation alone subtracting about half a percentage point off headline inflation in the euro area as a whole. So in other words, if oil prices hadn't fallen quite as much, we would have gained probably another half a percentage point on top of the very, very low headline inflation right now.
The ECB announced the TLTRO figures, which again left investors wanting. We really had to see an eye-popping number today to please the market. Will this be seen as ammunition for those who want QE? And can the bank go ahead without the support of the Germans?
I do agree that the TLTRO result probably stayed behind what a lot of people had been expecting and certainly been hoping for. So the 130 billion take-up adds to the relatively disappointing outcome that we had from the first auction, and overall leaves the ECB's balance sheet almost a trillion short of where it ultimately wants to get. Now, there's a question of the time frame that the ECB will allow itself to get to the 3 trillion, but even with the TLTRO result today, there's still a huge gap that the ECB has to bridge, and quite frankly, the current measures that it's given itself are simply not going to cut it. So it will have to do more. The crux of the question, really, as you say, is whether the Council can go ahead and launch into sovereign QE without the full support of the Governing Council, and that is a very tricky call that ultimately comes down to Mario Draghi's almost political judgment, I think.
Regardless of the hype, Draghi has made it clear the TLTRO is not going to be the silver bullet. Is structural reform still needed, and in what form?
I think Draghi and a number of other people have been very clear that monetary policy can't solve all the problems that the euro area is currently suffering on its own. So monetary policy can target and should target any shortfall in inflation. Structural reform and fiscal policy will have to address the more structural and sort of fiscal sustainability issues themselves. So this broad three-way split, if you wish, between monetary, fiscal, and structural policy has all have their individual roles to play. I do think that structural reform is seen as a very, very important tool to get long-term growth potential up in the euro area, and there are a number of things that even advanced and relatively sound economies such as Germany and France could be doing. So the list of potential structural reform priorities is quite long in a number of countries, and I think the ECB has been very clear that member states are the ones that are really demanded to take action in this respect.
German yields pinned at record before the ECB loan handout. The single currency is also likely to remain under pressure after today's various central bank announcements. What key levels do you think we should look out for?
Well, German bond yields fell further today. They're down about 2 or 3 basis points following the disappointing TLTRO results. To us, that's a clear indication that markets see this as another bit of pressure on the ECB to eventually move to a wider form of QE. So if that is true, and we expect certainly asset purchase to be significantly widened in the next couple of months, then euro area sovereign yields will probably come further under pressure, and potentially quite, losing quite a bit further, both for the German benchmarks as well as for the periphery countries. The other thing, of course, that we have to bear in mind is the exchange rate, and I think there also a move towards greater QE will bring downward pressure on the euro, and indeed that's one of the desirable side effects, let's say, of further monetary accommodation in the euro area.
Robert, thank you. Well, viewers, keep an eye on the euro and all your favourite currency pairs by clicking back for our early updates. For now though, it's goodbye.